Good Tuesday morning. I'm Zev Fema, research analyst for Action Alerts Plus, filling in for Catherine Ross. I'm here live from the NYSE with Jim Cramer. Jim, hope you had a good Memorial Day weekend.
Well, I went down to San Luis Potosí, SLP as we call it, just to do some work on some what my wife's got a business venture down there. Mexico is booming. I went to a Toyota factory, Mercedes-Benz. It's unbelievable.
Did you go horseback riding?
Oh, yeah. Well, I had to go round up some sheep.
Okay.
Yeah, it was more Boro.
Okay, you guys check that out on Twitter.
Yeah.
Jim, let's kick things off with the latest trade talks. Trump suggested little progress has been made with Beijing during the 4-day state visit in Japan, telling reporters, quote, he's not ready to make a deal.
But he also said there's going to be a good deal. So he's hard to read.
He kind of plays both sides.
Right,
But
let's say you sell the market on the he's not ready for a deal.
That's when you'll get the deal.
Well, yeah, then you'll get the deal. So that's one of the reasons why this market's so difficult, is that you want to leave it so badly because it's awful, right? It's awful, the market. Confidence is shaking, and then boom, you got this global payments buying the TSS,
Right, huge acquisition.
and then you got the Fiat with the merger. Geez, I don't even know where to go with the Renault, but I do know that Carlos Ghosn's legal problems got that involved. And so what happens is you leave at your own peril, but you stay at your own peril.
Right. So Jim, let me ask you real quick. At this point, does the market just not care about what Trump has to say on trade?
No, I think the market cares extensively what he says on trade. It's just that he gives you pro and con. He makes you feel like there'll be a deal, but it's going to be a deal on our terms. In the meantime, he loves to talk about how we're going to raise $1 trillion in money from the tariffs, and he continues with the narrative that China pays it. Now, I think that if you took any economics course, you know it's not true. But if you disagree with it, then you get in trouble, because the Orthodox. Someone called me a Trumpist this weekend, which I thought was hysterical. Well, I'm not either. But the idea that I'm a Trumpist because I was saying you could raise $100 billion, but I didn't say who paid for it. The people who buy pay for it. So it tends to be America.
Not a Trump. It's just a man represented by a dollar sign, pretty much. All right, Jim. So maybe rather than saying that investors don't care about what Trump has to say on trade, it's more so it's too difficult to go until you have the
when you speak to his people, there are people in the White House who are not necessarily for regime change, but what they definitely want is to stop China from being a great power.
Right.
And that's what Huawei's about. Now, FedEx did not. We'll talk about that. But if you want to stop China from being a great power, that's going to hurt a lot of companies. If your goal is to do more trade with China and have it so it's fair, that helps a lot of companies. So there again, the dichotomy. If you favor stopping China as a military power and as a world power, then you can't buy the market. But if you favor doing a great deal, like one of the things that the president said last night that was so interesting, he said, you know what, the Chinese are going to basically rue the day that they didn't go with their first deal. That deal might have been really good, and we've all been saying, why don't we buy stocks? So if the Chinese come back to the table with a little bit of finagling of that first deal, then you'll feel like, why did I sell my McDonald's? Which is at $199 going much higher.
So Jim, while on the topic of trade, FedEx issued an apology this morning for mishandling packages destined for Huawei Technologies amid accusations that it deliberately diverted 4 parcels addressed to the Asia offices. Is this going to have a larger impact on the discussions, even though FedEx apologized? Eunice
Yoon, who is such a good reporter and tireless, has a notation in go to my Twitter file. She has a notation about how literally hundreds of millions of people have already read about this in social media, and that it's going to really hurt FedEx, and FedEx is down a lot. Fred Smith came on Mad Money and said China's integral.
Right.
Integral. So I don't know what happened. I don't obviously who would ever divert 4 packages in that.
Right, they're saying it's an accident. The Chinese doesn't.
It was not an accident. Please, 4 packages. Can't we all get along?
It would be nice. So, and real quick, just while we're talking about FedEx, it is real money stock of the day.
Oh my God, we're doing great coverage.
And absolutely.
We had the best story on this, and we're going to continue all day with this.
Yeah. So Kevin Curran is going to be covering that over at Real Money, and actually, right before running down here, I asked him kind of the different angles he's going to take.
What's he taking?
And one thing he was telling me is, the natural thought process would be that you have to look at a UPS, right? If FedEx is losing, go to UPS.
Asked him, do we now
he's telling me that may not be the case because at the end of the day, UPS, FedEx, both American companies. He's actually looking at some German companies that he thinks could be an interesting play.
Boy, it's very interesting. When I was in Mexico, so many Germans in the town I was at. Japanese, and boy, this is their chance. The Germans blow this Well, then we really have to wonder what the hell they're thinking of. But so far, the tenure tells you they're going to blow it.
Yeah.
They're not winning. It's not zero sum.
So to see which names those are, get over to Real Money. Again, Kevin Kern's going to be covering that. Well, he's working on it right now when I ran down here.
This guy is unbelievable. A stock of the day is really one of the most exciting things we've been doing at TheStreet in the last since the year began.
It's one stock from 10 plus different angles throughout the day. So Jim, another big headline. Let's just switch over real quick. Fiat Chrysler and Renault are pursuing a $35 billion merger. The potential merger would make it the world's third largest car maker. And my question is, what does that mean for Ford and GM going forward?
No, I mean, GM and Ford Ford's doing quite well by getting out of areas that aren't profitable. But these car companies have to spend a fortune on electric and spend a fortune on self-drive. No one can make any money, so of course they got to merge. But one of the things that's so discouraging is, the ink wasn't even dry on that merger, and the French come out and say, listen, you can't lay anybody off. I mean, this is what happened when GE bought Alstom.
Which they're saying they won't, but I know Phil LeBeau was on CNBC this morning. He was a little skeptical on that, not laying people off.
And what they did say was that there are supply chain synergies. But look, I'm not as skeptical as Phil after what happened to Alstom and GE. I mean, GE bought the company. They thought they could do these big synergies. They were wrong. That was Jeff Immelt. I always wish him well.
So this is not a reason to go out and sell Ford or GM?
No, but I do like Ford because it's getting out of a lot of unprofitable areas.
Really focusing on the larger ones, the F-150.
Yes. But, look, in the end, let's do the pecking order. Okay. There's Beyond Meat. There's FinTech.
Which we're going to talk about on the AAP video. We just initiated one.
And it's wearing the hell out of me.
Yeah.
So it's part of that is the millennials just loving this, the whole trend about not killing animals and not eating dead animals. Not eating dead animals is really important.
Yeah.
I had a couple dead animals this week. It was delicious.
I actually did a taste test, the Impossible Burger versus
the
Beyond.
I thought Impossible.
I thought the same thing.
Did
I
you
thought
really?
The Impossible Burger tasted more like a real burger.
You want the third best? Is unfortunately the Nestle's burger. Now, we have Steve Easterbrook on tomorrow morning for Squawk on the Street. The Nestle's burger is in 1,400 McDonald's. Now, maybe they can make it better taste. I had the economy burger. I've not had their premium burger.
Okay. All right, so we're going to follow up on this taste test later.
Yeah.
Thanks, Jim. That's all the time we have for today. For all of you watching on TheStreet.com or Facebook, we're now going to jump over to our Action Alerts Plus members only club video. You can sign up at actionalertsplus.com to learn more about what Jim's keeping his eye on. Again, free trial will get you access to everything, including the monthly club calls with Jim, where he gives his latest.
Which is going to be very good. I'm already working on the script.
So get over to actionalertsplus.com to check it out.